I think new car dealerships are in crisis and what you need to know about it.
Some serious movement underway in the used car market. Prices finally dropping in for the first time since the pandemic.
You must have been shocked when you saw the car prices at the start of the year. What about now? The new and used car prices are crashing dramatically. Is it a good time to buy? Let's take a look at what exactly is happening in the car market. The global pandemic that broke out at the start of 2020 has profoundly altered the planet. Demand caused a significant deal of products to become scarce, which made them increasingly difficult to find or expensive. This also affected the auto industry. There are many causes, but the chip shortage was the main one since it stopped the production of new automobiles, which in turn drove up the price of used cars. Naturally, the COVID-19 outbreak was the cause of this chip scarcity, and the subsequent Russian invasion of Ukraine hasn't made things any better. Even so, time is a great healer. These difficulties won't last forever. Understanding the underlying factors that led to this surge in the car industry will let us monitor changes within those factors and forecast an advantageous change for potential purchasers. Now the car market is on the verge of a huge crash, and this will be the biggest crash you will see. The average price of a new vehicle was $48,808 in June, which is $865 lower than the average transaction price in January, according to a new report from Kelley Blue Book. As a result, prices have decreased by 5% from the year's beginning. Since the industry began to expand in response to supply shortages in 2021, this is the first time automobile prices have dropped over a sustained period of time. Auto manufacturers anticipated a sharp decline in car demand when the epidemic struck. As a result, they cut back on production, and the makers of microchips did the same. Due to the absence of new automobiles, people started using their stimulus funds and taking advantage of cheap interest rates to buy used cars instead, which caused used car prices to rise 4 times as quickly as new prices. Price increases for used cars were momentary and unsustainable due to the ideal storm of supply and demand. Customers can anticipate a decrease in used car costs below the typical levels as the auto market declines in the coming days. By the middle of 2022, auto production was back to normal. The supply of new cars will start to stabilize once automakers have access to the semiconductors necessary to produce a regular flow of vehicles. Millions of buyers who are compelled to buy used automobiles may switch back to new car purchases. Additionally, the pandemic's effects on the supply chain are starting to fade, which will aid in increasing the capacity for auto products. Used car demand will decline as a result of this. In order to assist in fighting inflation, the Federal Reserve has announced that interest rates will be raised this week. According to experts, the automobile industry could lose $22 billion in sales as a result of the rise in loan rates. This is so because changes in borrowing rates have a huge impact on auto sales. Increased interest rates will make borrowing money more expensive, which will decrease the demand for used cars. Customers might buy 500,000 fewer used automobiles and 150,000 fewer new cars as a result. Another main reason is inflation. Recently, you must have seen rising prices of groceries, clothes, and even basic items. This had a huge impact on everyone's life. People's savings are cut in half, and many are not even able to pay house rent. Many people are sticking to their current car, which leads to a decrease in supply. Nowadays, it takes more than 19 days to sell an average mid-sized car, whereas it was selling like hotcakes before. Used car market sales are also plummeting hard due to this. Used car prices will drop markedly in the coming months in the CPI, helping core inflation materially lower. In a period of months, the US auto market changed to a lower gear. Some analysts now expect that an excess of automobiles will trigger a pricing war that would drive prices precipitously downwards, despite the fact that the average car prices reached record highs only last summer. According to a recent UBS research, global auto production will likely outpace sales this year by 6%, creating an excess of 5 million vehicles that will need price reductions to move off a lots. Automakers are gearing up for a pricing war, and some electric vehicle manufacturers are already lowering costs, even if those price reductions might not take place until the second half of 2023. Given the bullish production schedules, we see a high risk of overproduction and growing pricing pressure as a result, UBS wrote in a note to clients. We anticipate the price war to spread into the combustion engine segment as it has already begun to develop in the EV space. The researchers predicted that luxury car makers would fare better than family car manufacturers in the event of price cutbacks. The combination of rising energy costs and expensive pricing that are out of reach for many consumers might have a significant negative impact on EV manufacturers. Tesla cut the cost of its vehicles by up to $8,000 in the USA in January. Some of its more affordable versions are currently in the same price range as popular names like Kia. According to the website of proactive investors, Ford Motor Company and Lucid are two more automakers who have responded to Tesla's pricing decreases by cutting their own EV costs. There is proof that auto prices have already decreased across all segments. According to the most recent Cox Automotive data, which was made public in April, wholesale used vehicle prices decreased 2.4% from a year earlier. According to Kelley Blue Book survey, new vehicle prices have fallen for 3 consecutive months, and it's starting to look like a sustained trend. According to data from Cox Automotive and the Automotive News Research and Data Center, there are nearly 2 million unsold cars and trucks parked in car dealerships all over the country. Rising inventory levels are largely a result of unsold electric vehicles. There are reportedly exactly 1,953,512 unsold autos at dealerships at the end of June. According to Cox Automotive, this translates to a 53-day supply using the sales rate from the previous 30-day period. That reflects an increase from the 1,928,619 new cars that were on dealer lots at the end of May, and a 75% rise from the same period last year. According to Auto News, there are currently 103 days worth of unsold EVs in the country. Although it did not provide a number, it claims that there are more unsold electric vehicles than in any other automobile market, with the exception of those in the ultra-luxury and high-end luxury segments, where supplies can last for more than 100 days. But it's important to take these numbers with a grain of salt. Earlier this month, Cox Automotive reported that there were more than 92,000 new EVs on dealership lots throughout the nation, and that General Motors, Ford, Hyundai, and Toyota each had more than 90 days worth of unsold EVs at their stores. The publication subsequently claimed that there were 86 Ford F-150 Lightnings and 113 Mustang Mach-E's available, but Ford soon refuted these claims, noting that the F-150 Lightning inventories are at 58 days worth, while Mustang Mach-E inventories are at 83 days worth. According to Kelley Blue Book, after 9 months of growth, the average incentive expenditure from manufacturers in June was $2,048, or 42% of the purchase price. Cash rebates or unique financing offers are 2 examples of incentives. According to Edmunds Research, new cars are now often selling for more than $600 below the original sticker price. While conditions vary by manufacturer, there is a general trend towards buyers being more likely to score a deal at the dealership. The main question is, should you buy a new car now? Experts have suggested waiting a bit longer, as the prices will come crashing down even more. There will be a decline of at least 10% in the used car market at the end of the year. We would like to hear your opinion on the car market crash, so don't forget to leave your comments below and let's engage in vibrant discussions. If you haven't already, make sure to like, share and subscribe to our channel and turn on the bell notification to receive notifications whenever we release new videos. See you soon.